Hey everybody, welcome to Ticker Talk. We are going to dig right into it here. We've been having a great little conversation, but we decided it's time to start recording this thing. So first, got to get through the disclaimer. If I can, where's my thing? All right, so everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and should not be considered advice to buy or sell any security. All trading decisions are your own and done at your own risk. Thank you for playing along with the disclaimer. And everybody knows who I am, so we'll skip right over that one. So you guys know the drill. If you have any questions or comments, or you want to talk about your ticker or anything like that, or even share your ticker, you feel free to unmute yourself or type it in the chat. And again, all of you guys have been here plenty of times, so you know the drill. So who wants to go first? Anybody have something they want to look at? So wants to know when the bleeding will end. Yes, I do as well. I wish I could give you a good answer on that one, but you know, maybe we can find something in the charts that will help answer that question. So here is the SPY, the S&P 500 ETF. So you can see, I mean, last time we were looking at this zone right here. And I've actually had that on there for a little while. I think I drew that in there about a month ago. I probably drew this in around here when, you know, we thought, oh, maybe there's a chance that this breaks down. But this 365 to sort of 370 zone looked to me to be, you know, potential really good support. And look at that. I mean, we spent basically the entire day inside that zone after gapping down, right? So that is good in that it poked very briefly out the bottom. Like if we zoom in here, okay, we can see we poked very briefly out the bottom of that zone and went right back up in it, right? This candle isn't good enough to call a hammer or anything like that, but it is this you know, for an awful day, for an awful red candle, you know, this is ever so slightly bullish because we did close quite a ways off the lows. So that's good, and you know, and right in a support zone. So that's hopeful. That's not something I can say, yes, that's the bottom or anything like that. But you know, if we can just stay, even just staying in this blue shaded area for the next few days, I think it'd be a win. You know, if we did some action like we saw back here and then break out of there, definitely that would be a win. Now, I know a lot of people have been throwing around a couple of numbers, and they're usually talking about the S&P 500 index, which is it's essentially the same, right? Except, you know, the numbers they're throwing out there are 3,500 and 3,400. You just divide by 10, and then you get, you know, the SPY pricing. So that'd be 350 on the SPY, and they're also looking at 340. And these numbers make sense. You know, we can definitely, you know, probably maybe just yeah, it's pretty much bang on 340 from this level back here, and you can see a lot of interaction with price there. So we're getting closer to this now, so I should probably put that level.
COVID levels. Right.
Oh God, I don't want to be putting these levels here in either though.
Yeah, that's basically pre-COVID.
Yeah, you're right, Ken. Yeah.
Yeah, we are coming into these pre-COVID levels.
Oh,
or we're, you know, we're not. I mean, we're not there yet. Sorry, I misspoke. We're not coming into the pre-COVID levels. They are within sight, but we've still got a number of important levels to go before we get there. That 340 though, the 339, 340 is a pre-COVID level, but that's a long way down still, right? I mean, that's another leg down like we've already had in the last over a week. Yeah, I think, you know, we're down so much here in the last week or so. We are due for a bounce or at least a consolidation. It can't keep selling like this. or at least that's what I keep telling myself.
They really took me off guard.
Yeah,
Yeah.
so how far, let's go from there to where are we now? We are down
So I think that's around 12%, right?
12%, yeah, 11.75% from the close.
बड़ी मार्केट से देखना सब मुंह पर डाल रहे हैं और खा ले रहे हैं
Let's just mute Sunny there. Sorry, Sunny, I had to mute you. Yeah, that's a big move down. That's a lot. Considering that we were already down from there, I think that was down about 15% or something. Whoops, yeah, here. Yeah. If we go from the all-time high, yeah, where we came from there was, yeah, that was like almost 14%, and we are now down. Whoops.
23%.
23%.
Bear market.
Okay. So, yeah, this is this is not good. I mean, and this is a fairly large move. This is a significant event. There's no doubting that at all. It could go further though, and it might. Maybe it does need to get down to this 350 level that people are talking about, or maybe even that 340 before this is over. Hopefully not. Hopefully we turn around now and start going up, or at least start going sideways, and be done with this move down, because it's getting painful. It's painful for me. I'm sure it's painful for you guys. And we're at a point where there's not much you can do if you haven't sold your positions that are getting hammered by now. It would be foolish to sell them now.
Yeah.
You don't want to be the last guy to sell. Maybe that was the bottom right there. I'm not suggesting it is, but what if that was the bottom right there, and you were the last guy to sell right there? You don't want to be that guy, right?
Right.
So when we're down this much, you got to start thinking about, okay, maybe this is enough. And I'm not saying run out and buy or anything, but I'm saying, if you haven't sold by now, then it's probably too late. So that's our SPY. Let's can you ask for the Qs? You can certainly take a look at that.
It's even worse.
Yeah, kind of. Yeah, more crash porn here, right? I mean, we're going to be seeing a lot of crash porn today. Anything we look at. Yeah. So how far are we now off that high?
Like 27 or 28. Oh no, it's
almost 34%. Yeah, 33.5% from the high, and to that low today it was just over 34%. Yeah, that's a lot. That's a lot. I think there's only been a couple occasions in history where it's gone down more than this. That was probably 2000, or that whole bear market, the 2000 to 2002 or 3 bear market, and then the 08. I think were the two occasions when this was down more. I'm not actually sure if this was down more even in COVID.
No, I don't think. I think that was like.
I think it was around 30%.
I think the COVID crash was down a lot, but it was quick.
It was wasn't it like a 2 days or something like that? I mean,
it was more than. Dude, I suffered through that. It was more than 2 days.
Oh, I got you.
I think it was like around a month or two. I think it was around a month or 2 months.
That's right. Yeah, because it was March and
about a month.
Okay.
Yeah, a month almost even, right?
Okay.
In here, we had days where the market didn't even open because the futures were limit down, meaning the futures markets were down 7%.
Wow.
So they halted. You know how like stocks halt, right?
Mm-hmm.
Well, the entire market halted because it was down too much. And so that level is 7%. When the futures market's down 7%, the market halts, and the market doesn't open. And you wait, I believe it was half an hour.
Yeah.
And you see if there's any bids. And they try and get the market open.
Yeah.
And this happened multiple days in a row.
Oh, wow.
Back in here. Okay. So this is the first one right here, right? That big gap right there. And then in some of these gaps in here, it happened as well. You can see another one right here. That would have been a halt right there. And I believe there was a halt the day before that. So there multiple times. It was crazy.
Yeah, that was when the circuit breaker.
Yeah, totally. Circuit breaker is totally going off. So, yeah, see here, look. I've gone from the high to the absolute low. That was only 30.5%.
So it's worse.
So we are now worse than the COVID crash in the Qs.
And that was
yeah.
I saw like the low day was March 23rd. What was the day of the high?
The high was
It was around February.
February 20. So yeah, so like you said, right at a month.
yeah.
But I feel like from a macro standpoint, I feel like we're in a worse shape now than we were back in March 2020. Right. With inflation, the war, and everything, I just feel like,
Yeah, you know what? You're right.
Yeah, you got a lot more factors.
In March of 2020, it was
just COVID.
All very much sentiment. Things
Yeah.
were closing down, and there was a potential for things to be really bad, but things weren't bad yet.
Yeah.
Right.
The other thing that you need to know about this period of time back here was that in late November and into December, there were unusual things going on. You don't really see it in this chart, but if we go back here to IWM, you can totally see it going on. We had also had a yield curve inversion, and you know that when you see a yield curve inversion is one of the best predictors of a recession. That a recession is coming usually within 6 months. And we'd had one of those in late 2019. And the Russell here, you can see in December how the Russell starts to kind of roll over here, and it goes up and it pulled back in the middle of January. And so while all this is going on, everybody's talking about the potential for a recession. And when you looked at market internals and market breadth and everything, it was really poor. So even though the market was going up, things were not looking good. And it looked like there was a potential crash coming or a bear market coming in the market. And then it was right around here where the market kind of peaked out right here. This day, actually, I remember this day quite well. The January 17th was, I believe, the day that was either the day that they locked down Wuhan, or it was the day that there was a case. The first case was found in Seattle. And I sold the crap out of my long-term portfolio on that day. I sold, and over the next couple of days, I sold everything out of my long-term portfolio. I'm like, this is getting bad. I could just tell. You could tell by the way the Chinese were like terrified of this thing, right? And then people, and then when it got to Seattle, it was already kind of, there were cases showing up in Europe, and it's like, no, this thing has escaped. It's getting out, and it's going to be bad. And it was a big decision to clear out my portfolio. It was the right decision. I thought, now once in here, I was like, oh my God, what have I done? Because when we started going back up and the world wasn't coming to an end, I'm like, oh crap, I was wrong. But I'm like, what? But at the same time, I'm going, what is wrong with people? It's spreading. It's getting everywhere. Everything's getting locked down. And then finally, it's sort of like, then we did fall off a cliff.
Yeah. I mean, as you're talking about this, the inversion, I mean, I think I read an article about, I guess there was something, I guess was it, I don't know if it was earlier this year, or was there some similar inversions or something?
Yeah, we had an inversion in March.
That kind of started to make people panic. I just remember that. I remember seeing the article and they were talking about the inversion, and I think like it did something to the market. It made the market a little spooked. I just, but I still wrapping my head around it. So you showing this is actually really helpful for me, I would say.
How can I show this to you? Because for some reason I can't get the 2-year yield on eSignal. But maybe we can look at it here. So TNX.
Is it on TradingView?
Yeah, I'm gonna go to TradingView. What is? I've got that. You know what? I've got that in here somewhere. Where is it? I can't remember the ticker on there for the 2-year yield, but I've got it right here. Just bear with me. Here it is. Okay. So I've got the 2-year is up in the top and the 10-year is down below here, and it was. So we just got to find where they crossed over. It was like right around here. Yeah, you can see.
Oh
I've got my
wow.
cursor. If you look at the at 2.045 on March 24th, they were the same. Let's see, the 2-year went up after that. Well, they're almost identical.
Oh yeah, then the 10-year went down. Yeah.
Yeah, it was like barely an inversion, but it was there. It was ever so slightly there. But yeah, it was there in March. So yeah, that got people worried about a recession coming, because it is a good indicator. However, it doesn't mean it's a recession has always been preceded by this indicator, but the indicator has not always been followed by a recession.
Got you. Makes sense.
But it is fairly reliable. Okay, so well, we might as well, while we're here, look at the IWM, because actually I didn't actually haven't looked at it in this much detail, but you can see we had this gap going back to November of 2020, and we closed that gap today in the Russell 2000. So that's not great news either. So now the Russell is below pre-COVID levels.
Wow.
Scary, eh?
Oh wow. Yeah.
So the next level we got to watch out for here is 160 in the Russell. So I didn't think I'd ever be drawing that level in again. I remember that level. That 160 level was like really important through 2018, 2019. Really important level, that 160. So
they're getting hammered right now.
In there, you can see the little double top right there, right? That was a little scary back then. That was early 2018.
Yeah.
And they look at all of these. It just could not get through there all through 2019, right? And then finally got through, and then fell off a cliff. So yeah, that's a really important level that we're coming into pretty soon. So want to watch that on the Russell, and hopefully we don't want to watch this 145. Don't want to be coming down that far. So whoops, there we go. There it is there. Okay. So, but yeah, a couple levels here to keep an eye on in the Russell. Yeah, it's too bad that this is all coming back into play. But yeah, back to the Qs. We kind of finished up on the Qs, I guess, right? Or actually, no. We need to look back further and see if we need to draw any more levels and take a look at some of these. Yeah, the pre-COVID levels in the Qs are
240, right?
Down from here.
And I guess in terms of, as we're looking at particularly these tickers, and I know that are pretty much like the QQQs, like maybe and all the other the ETFs like XLM. As we talk, thinking about what's going on, and I know we want to know when the bleeding will end, but I guess as we see what's happening, I think part of this also could lean towards maybe like a sector rotation. And for me, the question is, what sector will come out on top next?
Right. That's a great question, and the sooner we can figure out the answer to that question, the better for all of us, right?
Right.
That's definitely something that we want to be thinking about. I don't know. I mean, it looks like. See, I'm still bullish on energy. Now, I don't know if you guys watched the weekend video and then saw some of the discussion earlier this week, but about me talking about energy potentially rolling over, or at least having a bit of a correction, right? Well, that's going on right now.
Right.
Energy is definitely having a correction. It's been the weakest sector for 2 or 3 days in a row now. You think the markets look bad. Well, look what's happened to, look how bad energy has pulled back. Now we're coming, this is XLE, by the way.
Yeah.
The energy company's ETF. Now we're coming right into the 100-day moving average. Maybe that provides some support, and you can kind of see that it's a little messy, but there should be some support in here. We definitely have this volume node right here. So we have potential support here in energy. There could be a bounce here that we want to play. I really don't think energy is just ready to roll right over and die. We're certainly in a correction. There's a ton of red volume coming into this, right? Now, look how much volume on this day. Volume keeps going up. This is probably the nastiest day of all of them. Is this capitulation today? Do we bounce now tomorrow? Have we gotten rid of all the weak hands? Hard to say. Maybe there's a chance that we have, or we have another day like today, and then that really is the capitulation day. So yeah, tough call there. So
no, that's because I think like a lot of that volume spike, right? I think that was like a lot of investors within the market were shifting to energy, right? Almost as like a hedge against, tech and all the other things. And also too, that was right. If I'm just for clarification.
Absolutely.
Okay. Yeah.
Definitely. I mean, I was treating it as a hedge, I have been for a while. I mean, I was getting into energy because, quite some time ago, because it was clear that, energy's on the way up here. This looks like the next hot sector, and getting in, and then I was getting in heavier and heavier as the market was starting to kind of unwind a little bit. I was starting to unwind some of my positions and moving some of that cash into energy, because it's like, yeah, energy is going to be a really good hedge here. And it's funny you mentioned energy as a hedge, because I said to a buddy today, it's like, what the hell, man? Energy's falling apart. This is supposed to be my hedge against all this crap. This is supposed to be saving me. Even though I like I said I was going to do, like on Monday and Tuesday, I cut some of my energy positions a bit, but I didn't sell right out of them. Right, I still want to be in them. So it's still painful. What's gone on the last couple of days is still a little painful there in energy. So what sectors, what are going to be the next hot sectors? I think that's something I'm going to have to give more thought to, and I challenge you guys to give some thought to that as well. When we're coming out of a bear market, or if we do go in a recession, then come out of a recession, or maybe the next hot sector is something that does well in a recession. Some of the things that I can think of, now these stocks have not been doing well either, because when they're selling everything, they are literally selling everything. But at some point in time, companies like the dollar stores, Dollar General, and anything where you can go, instead of buying maybe instead of going to Whole Foods, I go to I don't know what the cheap version, I don't know what the cheap grocery stores in the US are, but like the Dollar General of groceries, right?
Right. I mean, Walmart, I wouldn't say it's cheap, but it's definitely, that's where I think people go, right? Walmart,
yeah, okay.
Walmart, like for groceries.
Yeah.
Dollar General.
Yeah. But Walmart's got its own problems right now with their whole inventory issues and whatnot. But yeah, so you're getting the idea though, right? You may adjust your buying patterns to try and save money on your groceries and on some of the other items that you have to have. And you're going to go to stores like Dollar General, and shop there maybe when you wouldn't have before. When you're flush with cash, maybe you're not going to. So there's companies like that can do well. I mean, that's not really a sector, but these are places we could look to, when we're starting, when the bottom is kind of in. These might be companies that do well because they are kind of recession proof. And we should maybe look at what are other recession proof industries? This is something that we should be studying, because that's somewhere that, you know, our money should probably go, as the market starts to improve, as we start talking about maybe a bottom is in now. So that's the sort of thing that we want to be thinking about and watching out for. So, and that's, you know, something we should be talking about in the Discord as well. If anybody's got any ideas on that sort of thing, you know, let's definitely bounce some ideas off of each other.
I like a good research project. So no, that's helpful. I mean, I guess for me, I also was thinking about, because I think even COVID, and I don't know, I'm also thinking about like the whole healthcare industry and how COVID has changed that as well.
Yeah.
You know, and again, like, you know, still a new trader in things, but I've always just, I don't know, I'm a little bit also intrigued with the healthcare sector. And I know a lot of the big moves really hinge upon, you know, like some big research thing that has happened. But also in the grand scheme, I wonder how, you know, COVID and this, you know, how COVID has really affected that, and what's the rebound? What does that look like for the healthcare sector as well? That's always been my curiosity.
That's a good question. I've just pulled up the healthcare ETF.
Mm-hmm.
This is so broad, though. You know, I mean, this is everything from, there can be health insurance companies in here.
Oh, yeah, also it's a pharmaceutical.
Health providers. There's biotech in here. So it's tough to really get a feel of what's going on. But you can see, and I remember talking about this on the weekend. How we were right at this support and it wasn't looking good for it, and you can see that broke down, right? So, you know, where does this go? Does this, you know, it's even broken down below this little consolidation here. So does it, you know, do we come down into this area here? You know, it's entirely possible.
Yeah.
But yeah, we definitely want to be zooming in a little more than you know, anything we're going to learn from this ETF here. You know, when we can do that, we can look at, see, the problem with pharma is such a hard sector to play in, unless you really know this space. You know, Brandon being a pharmaceutical technician, you know, at least he knows the language of this space. And if we're thinking about moving into this space or moving into biotech, looking in there, you know, we should definitely be hitting Brandon up, you know, to at the very least help us decipher some of the language that's used there. I'd love to be able to play in that space, but I just find, you know, it just feels way too dangerous for me.
Oh, I'm with you. I'm completely with you. I think that's why I've always just been intrigued. I think just because of the aggressiveness of it, I think, you know, in terms of, and then for me, just kind of think things that kind of move that always intrigue me, like why, right? You know, like why such the strong shifts.
You know, I mean, a lot of it, I mean, you see it in the biotechs more than anything else, right? You know, these biotechs are you know, they're trying to collect money. They're collecting investment out of the market, right? They go into the market, they collect money, and they do these tests on drugs, and they try to hype things up. They make you think that this drug is going to work, and then you know, the FDA comes along and says, no, you know, we're not going to approve it, and then they drop through the floor, right? It's such a volatile space to be in. But you know, this is a space that saw so much. It ran so much post-COVID. It was bound to fall, but look where it's come. It's down at the COVID lows.
Wow.
You know, this is nuts. There's your COVID low right there. Yeah. And look where we are right now.
It's wild.
Brutal, eh?
That is very brutal.
I mean, we had that low there in, when was that, 2018 too. It's just, yeah. So I don't know. I mean, you know, I don't know. I mean, are people going to see like a giant Head and Shoulders here? Is this the beginning? Are we going to get a right shoulder right here, and then the real move brings us down into here?
Yeah.
I don't know. I think, this is kind of a time when we really need to use our imagination. And I don't like imagining things like that, but I think that's something we need to consider. If we're thinking the biotech is the next hot space, there are reasons to believe that it is not.
Right.
However, if it does bounce here, and can start coming back up through some of these levels, then yeah, maybe this is a place we want to be. But if we're going to be in there, I really think we got to play it with an ETF. We got to spread out some of that risk. So whether that ETF is XBI or there's another one, IBB, and of course there's always ARKG, right? The genomics. I mean, to me, genomics is kind of a no-brainer. I mean, to me, it's like the future of healthcare for the human race, right?
Yeah.
It is going to get lots of investment. It's got to go up from here at some point.
Jeez. I mean, ooh.
But I mean, you can't go in this now. I mean, this is crazy to try and go in this now. You've got to wait until it puts in a pattern that you can get in there with risk defined. And I talked about this, right?
Mm-hmm.
Talked about this consolidation, how nice this consolidation looked, and if we break out to the upside, then you're off to the races. And you could have played this. You don't actually have to wait for the breakout. You can buy it down near the bottom of the consolidation. But if you're gonna do that, you got to have a stop just under here. Whether it's an investment or not, right? I mean, you've got to have a stop just under that consolidation, because look what happens if it breaks out to the downside.
Yeah, there's no telling here.
But yeah, we need to wait. We need to wait for this to set up again. It's set up. It was nice. This is a nice setup for a bottom, right? It set up. It was ready to go. It didn't go. We got to wait a little longer now. So go through your sectors and looking for things like this. If you're looking for bottoms, if you're looking for places to get in, if you're looking for maybe getting in the next hot sector, but also when you're doing that, be ready to bail quickly. Don't get trapped in these things in this kind of market. All right. Anybody have any other tickers or symbols they want to look at?
I will say Square.
Square? Okay.
Yes.
You're gonna make me look at that, eh?
Yes,
I've been
it
burying
actually-
my head in the sand on this one.
Right? Yeah, I was gonna say that.
I'm a bag holding investor now.
I think they're at COVID bottom right now. I just looked at the chart a few minutes earlier.
Man.
Yeah.
Wow.
Right? They're
Not
like
quite the COVID.
not there
bottom.
yet, but almost.
Not there yet.
Close enough though, eh?
Very much.
Wow.
I think this
This
Yeah.
level has gotta hold.
I think it has to do with the crypto collapse too.
Oh yeah.
Absolutely.
Yeah.
Yeah.
Absolutely. Do you remember me saying, and I wish I had bailed on Square back when I was like saying how much I didn't like that they had really tied their wagon to crypto.
Mhm.
They'd become too tightly correlated with crypto.
Was that around the time they changed their name? Was that around that?
Before that? It was
right
even,
before that. Yeah.
it was even before that. Like a lot of what they had been doing had been. I mean, I remember actually even back in here in the the COVID recovery area. Ackman was, in their earnings, you could see the crypto effect in their earnings. And I kind of didn't like it much then because it was having an outsized positive effect on their earnings. And I guess, I guess they saw that it was having a really good effect on their earnings. So they went with it, they went deeper into crypto. And I was becoming concerned about that. And well, now, this is, now we're seeing why I was so concerned. But this is one of those, stocks that I was talking about earlier. Like, if you didn't sell when this trend line Actually, get rid of that trend line. Well, actually, let's just redraw that trend line. You know, if you didn't sell when this trend line started breaking, you know, if you didn't sell there, and if you didn't sell when it broke down through 200, and then if you didn't sell when it broke down through this here, why would you? You know, you're not going to sell now.
Right.
I mean, you know, we're bag holders in this. You know, they either, you know, they recover out of this. And I feel really strongly that they are going to recover out of this. It's just too good a company for them not to, right? But they need to disconnect a little bit from crypto, and they need, I think, to go back to more of their core business. But you know, there's maybe another $23 of downside. I think that, I mean, this has got to be the absolute bottom in here, you know, at this COVID low, and you've got this low back here from 2017, right? They're a better company now than they were in 2017. Yeah. You know, you know, I mean, if you disagree, tell me, please. But you know, I feel pretty strongly that they're a better company now than they were back here.
Speaking of, as we talk about, like, you know, fintech with Square, and you have, you know, like a lot of these other new, you know, fintech companies that are now on their, you know, have now made the scene, right? I wonder, like, as we think about, you know, once they begin to make their turn, you know, how, you know, I wonder what does, you know, that look like in terms of versus the kind of, you know, that other I guess more or less that comparison between them versus like your main banks, right? Like your Chases and
right.
Like, would they play nice, or are they, or will one eventually take out the other? And I'm not saying this is like what happened like overnight, but
yeah,
over the next 10, 15 years or so, as you know, things are shifting in terms of financial services.
yes,
That does make me ask that question. And as we think about, you know, long-term investment and long-term thought, even about how financial services we think about. Because I just remember, I think I read an article where somebody gave an opinion where they were just kind of like shaking their head at Apple for getting in the buy now, pay later space, right? But you also can kind of see, I can also kind of see why they would want to get in that. I mean, you know, and so a lot of that, even in terms of, even with this fintech and having, so I don't know, just some thoughts that come to my mind as even hearing you talk about, like, you know, Square, you know, and then you have a couple of others that have come to rise to the occasion in that way. So
yeah, and I think, I mean, you know, there's going to be competitors there, and there's going to be, some of these companies will fail. But I don't think Square is going to be one of them. You know, I mean, if they do go down much lower, they're going to be a buyout target. You know, if they get bought out for cash, I mean, what are actually, no, maybe actually 20, what are they, 30 billion right now, eh?
Yeah.
Well, that's less than Twitter.
yeah.
Why isn't Elon buying Square instead of Twitter?
Who knows?
They can use Square to finance the Square to buy your Tesla. Yeah, so okay, so they're 30 billion now. If they come down, you know, worst case scenario, they come down to 35. Is that so? So they'd be 18 billion. Yeah, they'd definitely be a target. I gotta think they're a takeover target at or a buyout target at 18 billion. Somebody's gonna want to go get them.
Yeah.
Yeah, that would suck. I mean, that'd kind of be the worst thing for shareholders, because especially if it's a cash deal, because it just means you get your cash. You lock in your loss, right?
Right.
So we don't want to see that happen. And I think that the board is smart enough to realize that you know, that is not something that's good for shareholders. So they're going to be trying to do something about this. You know, so I think we could kind of, I I think we've got to probably fairly soon see a turnaround plan for stock price coming out of the company or coming out of the board, or at least some talk about it. And we may see that sort of thing coming, with a number of companies, them actively trying to support their share price so that they're not an attractive takeout, buyout target. Yeah, because this is a prime example of one that could be and would not be good for shareholders. It was. Twitter, on the other hand, I mean, I think that's great for shareholders, especially if they can force Elon to pay $54.
Yeah.
Yeah. Is that kind of like, what do you think? So, what do you think about everything we just discussed there on that?
Yes, I agree. The crypto space is really sinking the stuff, I guess.
Yeah. I think there has to be, like, I know that these, like, we're seeing all these stocks crash through levels that we think, it's got to support here, got to support here. And eventually these levels will start to support. The odd company is going to go to zero. But ultimately, if these are good companies, they can get knocked down. They can get knocked down a lot, and they do come back. And you only have to look back to, you can look at in 2000 and look at what Amazon was worth then, how much it got knocked down and how much it came back. And any of these companies back then, Apple back then as well, was worth next to nothing. So the good companies do come back. So we just have to continue to do our research and stay on top of these guys and make sure that it is still a good company. So hopefully that's helpful. So
thank you, Gav.
Yeah, you're welcome. Anything else we want to look at?
Kind of want to look at semiconductors for whatever reason. I don't know why. I guess because I'm thinking about like, I need not necessarily them being recession proof, but I think on the other side, as various as countries and as companies, industries continue to evolve, how much semiconductors and the like will play an important role in that.
Well, I mean, obviously going to play a huge role.
Yeah.
But they need to be able to produce them.
Yeah, true. That's the problem.
I think that they need so much capital input. To get these foundries going. It's tough. I don't know. I don't know what to say about this one, because if you look at how far away we are from pre-COVID levels, we're still pretty far away. We've looked at some things where we're getting pretty close to pre-COVID levels, right? So we're still pretty far away from pre-COVID levels, and rightfully, I think we should be, right?
Yeah.
But if everything else starts coming into pre-COVID levels, does this just come in by association? Right. Do people start seeing that this is, why is this still so far above pre-COVID levels? And do they start selling this down a lot as well? This has held up somewhat well compared to a lot of other things. Let's see, how much is our high? Pretty much there, right? Mm-hmm. So yeah, okay, we're very similar to what the Qs are, right? Right. But for what is a very high growth kind of space, that's not bad. Only a few percent lower than the Qs, down 36% off the highs. Because this is a pretty volatile space. Yeah. Now we're gonna look at stocks in here that are down way more than that. Micron, for instance, is coming. Look at that, and a very important support.
Yeah, right now. I looked at that earlier. Oh, I was telling you, I looked at that earlier today. Yeah.
So where are we down here? Yeah, Micron down like 42%. I'm sure that AMD and Intel are in better shape. I
But
believe.
AMD hit, I think, almost 10% today. It was pretty.
Really?
Yeah, it got pretty nasty on AMD.
Yeah.
Yeah, that's okay. So it broke us an important support level. Got another one down, down below here. And, this is starting to become a bit of a theme to me, where we have this sort of upper support level, and then not far below it, another support level, and then it's a big drop to the next one below that, right?
Right.
So, but again, this level here should be hard to get through. So, maybe it does come down there, but I don't think we should be terribly concerned when it does. It's kind of got to bounce there. Just like, we had a few bounces here, right? It took 3 tries really. A lot more. I mean, there were way more days, but really 3 major pushes to try and get through that level before it came through on the 4th one, basically. And so, we do have the opportunity for a bounce here. So what are we off the highs here? Just for 50%.
I'm not sure that's much to look at.
Brutal. What about Intel?
All-time low. Not all time, right? 52 weeks.
50,
Oh wow, 52 weeks. Wow.
more than 52 weeks, I bet. We got to go back to 2017, September of 2017. 5 years, almost 5 years.
Wow.
See that level. Wow, man. So I mean, we'll call this a minor one because it didn't even support. It should have found support there, right? Didn't. There's a level in around here ish. So where are we at now? 38, level in around 33. Man.
Yeah, it looks like that 43 was the major one, and then it just said, "Oh, I'm done."
There's your all-time high back here, right? In 2020. So how far are we down from that? 46%. So not as bad as AMD. Wow. But on a relative basis, I mean, the way it's come down into this 2017 level, though, it seems worse than what AMD has done. Okay. Anything else we want to look at? Oh, Justin asked for TDOC. I'm not sure there's much to look at. Yeah, there's probably not much to look at here. I remember not long ago, this was trying to bounce. I mean, it's just had such a nasty decline. And I do remember it was trying to bounce, and I guess maybe that was there. So still holding at this level, right? This support level is holding quite nicely. Is it the same sort of support level that we kind of, we're just looking at in Intel, where it broke? And if it does break, where does it come to? It definitely draw a level here at like 25-ish. There. Maybe there'd be a level around here. Yeah, in around 20 probably. But so far that's holding. And it, like, on a day like today too, it actually did all right. I mean, it gapped down and everything. Went a little lower and came back up, right? It tried to pierce this. I wonder if we should adjust this a little bit. Yeah, I guess we can. Let's bring that down just a hair there. So let's get over there. Yeah. Yeah. Yeah, this is a good level for it. So if you're I mean, Justin, are you in this bag holding? Like, lots of us are in lots of other stocks. Are you looking to add to this or average down or something? Do you have what's up with this for you? And you can unmute yourself if you want to chat with us. I imagine
Hey, Kevin.
Hey.
Hello. Yeah, it's actually sold at a small profit, like around the 220 area.
Congratulations and well done.
Thank you. I mean, when it fell from its high, I thought I was just being a chicken. I thought I was doing the wrong thing, but I couldn't take the pain. I sold it, and then but I have two accounts. I have I have my Broth, and I have my regular brokerage account.
Okay.
And I noticed that I still had a few shares in one account.
Okay.
Which is I don't know what to do with it really. I'm just deciding whether my money would be better placed somewhere else, or if I should just kind of hold on to it, since it's kind of just a much smaller.
Right. See, here's the thing. I mean, at the moment, I don't think there's anywhere else to put your money. Right. I don't really see, and
good point.
Presumably this is not the only money you have either, right?
Yeah,
hopefully you've got other cash sitting around waiting for an opportunity. So I would suggest now is kind of not the time to do anything, right? Is this stock going to go to zero? I don't know. I mean, where are we now? We're back at these. So we're in 2017 levels on this. This is a company that probably needs to have a restructuring plan, or needs to do something with their upper level executives. Obviously, the executives in this have dropped the ball. So, are they likely to come up with that plan? Are they going to fire the CEO? Marvin just says, do you think somebody could buy them out? Maybe all the guys from Livongo come back and all that money they made and buy their company back. Get rid of the TDOC part and bring the Livongo back to what it was. Maybe this is a buyout target and a takeover target, and maybe that would be a good thing, especially if it was a company that bottom out with stock, a better company than this, and then decided that they wanted to rebuild this part of this company. That's a possibility, but I do think that there's a much better chance of this company trying to rebuild itself than there is of it going to zero. So, I mean, 300 to 30 is pretty much this thing going to zero, right? So is there much gain for you to sell these shares now? Or is the risk reward say, hey, this is kind of a lottery ticket now. Should I hang on to this? Or at least hang on for a little while until I do find a better opportunity for this money? Because this could be one of these stocks that that bounces quite strongly as we come out of this, especially if we can see some sort of restructuring at the executive level, a new CEO comes in or something like that. So, because it kind of looks like the downside in this one is done. That it's so damaged already. Anybody who wants out is out. And it bouncing around in this range, and this could happen. It could bounce around in this range for 6 months, a year, maybe even longer, right? But I don't think we see much more downside. I think that sideways is probably worst case scenario here. And when they do start taking some action to try and get this company back, that's when we start seeing upside. Although,
Okay,
you know,
cool.
you also got to decide that is this industry viable even? That's another thing, right?
Yeah.
You got to believe in the industry.
And at what point do you think, if it drops a little bit more, you think if it like hits another level, like maybe that would be a good time to kind of just call it quits on it, or?
Yeah, like where? Yeah, so you want a line in the sand, I guess, is what you're asking for.
Yeah, I guess. I mean, honestly though, Kevin, I'm a little bit more optimistic like you. Like I kind of agree with what you're saying that you know, anyone who wants out, like, definitely is out by now.
Yeah.
Yeah. So.
Can you handle another 20%? Can you, like, you know, if you get a close or two below 20, for instance,
Yeah.
is that your line in the sand, or do you want your line in the sand to be sort of the 24 level maybe?
Yeah.
24 is a riskier kind of line in the sand, in my opinion. But 20, you know, if it breaks below 20, it probably is going to zero.
Okay. Okay. Cool.
I'm gonna wish you luck with this one.
Yeah. Thanks, Kevin.
You know, I mean, I've got a couple of these lottery holdings as well. You know, Playboy has turned into one of these, right?
Yeah.
So, and yeah, you know, you do this long enough, you end up with a couple of these. You kind of don't want to. It's not good investing to end up with these in your portfolio, but it just kind of happens sometimes.
Yeah, I actually got in at like 9.50 for Playboy because I was like, oh, this looks good, and then now it's at $7. But I'm pretty hopeful about Playboy. I like Playboy.
I am too.
Yeah.
I really like it. I liked it. You know, I liked it way back here. I really liked it. You know, I thought that their plan, you know, it's a royalty business. They should be able to do really well with this, right? It should be a really high margin business. It shouldn't cost them much to run it. I think that just, you know, the market doesn't really understand this business at all. But I think this company can be around long term. The people are always going to want to, you know, to pay money to use that logo forever, right?
Yeah.
So, you're not driving, are you?
No, I parked right now.
Okay, good.
I'm out here actually about to walk my dog.
Your dog? Oh, the dog's awesome.
Yeah. Yeah, I'm here in Southern California, so.
Oh, nice. Okay, cool.
So hello, everyone.
Hey, we used to have a guy who used to come to the live meetings, and he would drive with his camera on and talk and everything. We're like, no, don't do that.
Yeah, I always try and catch the live ones, but you know, I worked usually, and this was just kind of one of those days where I had a moment to watch you guys live. So
that's awesome. Well, I'm glad you could pop in.
Yeah, thank you.
So yeah, where were we? Playboy. Yeah, like, I mean, look at, you know, we've got a double bottom here now, or potential double bottom, right? It's got a hold here. Has it ever been down this? This is all time low, isn't it? Yeah. Okay. Yeah, this is an important level right here. Draw that one in. I'm really getting tired of drawing in these lines lower and lower and lower all the time. Need that to come to an end. But, you know, look at today, it came down there and it stopped and it went up a little bit. So that's something. You know, all this decline, it will stop eventually. And let's see. Here's something. Okay. I mean, I don't know what you know about RSI divergences, but we have one here, and RSI divergences are generally bullish. So when we came down before, look how low the RSI was on that low. It was right down in here, right? Now we come down to that exact same level, and the RSI is not as low. So that's a divergence. That is bullish. It's a small one, but it's there. It's something, right? It means momentum to the downside is slowing. So this is, you know, something we want to watch out for. This is often something you see at bottoms when something starts to turn up. You know, this is going to have a tough time. A lot of these stocks are going to have a tough time on the way back up because there's going to be a lot of overhead, right? They've got a lot of levels that they have to get back through, and that takes time and it takes work. You know, little things like this are some of the clues that say, hey, you know, this is a potential bottom here, or, you know, we do potentially turn up from here. So tomorrow should be quite interesting. I see the futures, the evening session in the futures is opened and everything is green. So things are bouncing a little bit from where we closed. So that's good. That's nice to see. So Marvin, you've asked about RBLX. I feel like RBLX is turning into one too, but I'm trying to stay optimistic.
No, yeah, it's Roblox.
Roblox.
Yeah, we was talking about backholding, and I was just like, you know, I like Roblox, but
yeah, it's not down at its all-time low yet.
no, it's not. I will never forget that was the day earnings came out, and right around, and the earnings were kind of like somewhat in terms, I guess I can't remember if it was, I think it was their forecast for how many users they had that people got like really excited about, and it shot up. Yeah. And I was just like, you know, I think you know, having like little cousins is what made me, you know, that's what made me know about Roblox beforehand, and it's like and the ecosystem that it has built around it gave me kind of like this overall bullish tone to the company itself, because, you know, it's like you got people who have made YouTube channels that are profitable off of Roblox, and so, you know, but I'm also kind of like, well, will it come back here and like really hold at that level, and then actually, or I guess, you know, maybe get bought by somebody at some point, like Minecraft got bought by Microsoft. I don't know. But, you know.
Well, look at, they bought that strongly on earnings there, right?
They did, yeah.
So that makes that a really important level,
right?
You know, so we may come into it, but it should bounce there, you know, because if they've, you know, it was only a month ago, or, you know, just over a month ago, that they thought there was value there. Mm-hmm. If it comes back in here, they're probably going to find value here again. Right. So this is an important level. This is a level that should hold. Oh, I think that's on pivot. Let's go. You know, so yeah, we definitely want to watch out for that. You know, but I mean, it looked like you had look at these 3 days of these lows right here. This, what, 25 and a quarter, basically. Yeah. You know, that was holding nicely. It did cut through that today, though, and closed below it. So that's not ideal, but still above this level. And I really think you find buyers there because they found value there before. And they'll, you know, look at the volume it did too. Yeah, there's going to be people who want to support it here. Yeah. All right. Okay, time is getting on. We've been doing this a while. Yeah, I think unless anybody's got anything else, I think we're gonna call it a day here. I'll be doing the weekend video, of course. So watch out for that. And next week we'll do this again next week. Hopefully, let's keep our fingers crossed. Maybe by this time next week. Although that's only tomorrow and 3 more trading days, because Monday is a holiday in the markets, Juneteenth. And so the markets are, I think that Juneteenth though is on Sunday. Is that right?
Yeah,
Juneteenth. The market.
Yes.
It's a holiday. Yeah, on that Monday.
For sure. Or whatever they call it. So that's all good. That's cool.
Wave your magic wand over the weekend.
Little recharge, little time for a little bit of research, maybe find those hot sectors. But anyway, so next Thursday we'll do Ticker Talk again. This is a really fun session. I really enjoyed this. It was really nice having everybody interacting like we did. That makes this so much better than me just yapping away for an hour and a half. So yeah, thanks for coming out, guys. Thanks for thanks for getting all interactive and having really good conversations. This was a really good session. So
Thanks, Kevin.
Thank you, Kevin, for
welcome.
sure.
So yeah, enjoy the rest of your day, and we will see you all again soon.